Hi everyone, let's go over my bullish and bearish low time frame and micro Elliott Wave scenarios on Bitcoin. Also, my next video at 1 p.m. is an announcement, so make sure to check that one out because it's important for the upcoming days. If we then go to my low time frame, more bearish scenario over here, we are looking at a zigzag, which is a 5-3-5 move ABC, where we're looking for B to reach this white box over here, which is currently sitting between 27.7k and 28.2k, mainly because of two target boxes that I have inside there. The lower one being between 27.7k to 27.8k, and the one at the highs between 28k and 28.2k. In this particular scenario, wave A is then already finished after a 5-wave move to the downside, 1, 2, 3, 4, 5. Now expecting a 3-wave move towards the upside in a wave B, where in my opinion wave B has to be at least 38% of the time it took to develop wave A. Now that already happened. As you can see, price has passed the 382 fib time taken from the high to the low of A and then double click over here, so that is nice. However, looking at the lower time frames, yeah, you could argue there might be a bit of a 3-wave structure, but preferably I reach a little bit higher to at least take this high as a bare minimum at 27.360, but if price continues over here, then the target box up there is next as mentioned. If we then look at wave C and the target area for this wave C over here, then what I think is interesting is that the most common target area for wave C being the 1 to the 1.236 between 26k and 25.5k, taken from the high to the low of wave A to the imaginary high of wave B inside this area, is in confluence with the double bottom. And those are these lows over here. So we have a double bottom over here, the target area of wave C in confluence with the double bottom if price can manage to reach this wide area. And what is interesting also is that it doesn't really matter where price is ending up inside this area, because wherever you're going to put the pivot, the 1-to-1 or the 1.236 or the space in between is always in confluence with the double bottom. So that is a very interesting target for then potentially a wave C, or this can also be a wave 1, 2 and then a bigger 3. The difference is that a wave C is usually more lazy, more sideways, takes a bit more time than a wave A, while a wave 3 is more vertical to the downside and also has more increased volume than a wave C. In the bullish scenario, which still feels as an alternative to me, we are looking for upside, and in this scenario the reason for me that it feels like an alternative is because of this wave C extending all the way to the 1.618, taken from the high to the low of A to the high of B, which is a rare target for a wave C, not a common target. It is however a common target for wave 3 if we look at impulses. And also this wave 3 is 3.5 times longer than wave A. I just mentioned wave C usually is longer than a wave A, yes. However, then I'm looking at like the 1-to-1 1.618 area, so this area over here, or maybe the 2, but the 3.5 is very, very long for a wave C, and therefore not immediately something that takes the preferred position in the scenarios that I have. However, if this is a 3-wave structure, then there is the possibility to take this high, either continuation to the upside in an impulsive structure, and then on the lower time frames a wave 1, then a 2, and then eventually a bigger 3 up, and then look how far price can go. Or we could get a expanding flat structure, which is a 3, 3 and then a 5-wave move towards the downside. This still is an alternative, and we have to wait and see how it develops. With this bearish scenario, the invalidation is this high because you expect a 5-3-5, where the corrective B is not allowed to take the high over here of the first 5 waves towards the downside. If we then go to the micro time frames, interesting stuff has been happening, right? And what I think is also very, very interesting is that this high over here has not been taken at 27.360. So now locally we have a double top as well, 1, 2. So we have 2 tops, very interesting, usually a magnet for price. So more upside in this scenario is something we are looking for, where the low over here is the low of this impulsive structure to the downside, where then this move to the upside can be counted as a 5-wave move towards the upside and then a wave A. Then we have a corrective structure in a B looking to be a WXY scenario for then a wave C towards the upside. And this wave X, bit of a question mark. You could position the X over here and then a 3. Then we have a 3 over here. And then you have this as a longer Y, to like sideways Y basically, that ends with the wick here at the lows. Or you can put wave X more to the right, and then you would expect another low to be made potentially around the daily and the golden pocket for some support as well. The golden pocket is taken from the low to the high of wave A, and the daily sitting at 26,828. So that is an interesting area of support. So it's a, we have to wait and see how that develops. What is interesting though is that we are creating bullish divergences on the lower time frames, on the micro here. So you can see price now making a higher low on price, but on the blue line a lower low on the CVD. High low price, lower low CVD, that is a bullish divergence, and we have to wait and see how that is going to develop. Of course, if more locally over here price is going to start creating bearish divergences, these get priority, but we have to wait and see. At the moment as it stands, we have bullish divergences. If I go to the 5 minutes and zoom in over here, then you do see that maybe on the 5 minute we have some bearish divergences, lower high on price and a higher high on the blue and the yellow CVD for potentially a little push to the downside. But the moment these lows over here are taken is the moment the CVD has played out more locally here. The moment this high is taken, then these CVDs are invalidated. So that is quite interesting what's happening on the micro over here. And what I think is also interesting is if this is potentially the low of this wave B over here, then the target area, the 1-to-1 and the 1.236 up here are in confluence with the target box. So we are then in confluence with that target area for the higher, the bigger wave B between 27.6 and 27.8k. So this is a very interesting area, and if price would drop over here more locally for then a lower target, then you can see even if price drops to the daily or the golden pocket, the 1.236 is still hanging around in that blue target box area. So this is definitely a very important resistance area for me to wait and see what price is going to do, if it is going to reach this area. But then again, right, we have some bullish divergences over here at the moment. Target is taking these highs, and then we have to wait and see if price can continue or if it eventually dips towards the downside because of the liquidity grab over here. If it continues, the next area of interest is going to be these highs over here. And if price is potentially moving to the downside, then this is an interesting area to wait and see what price is going to do, because you always need a plan, you need your strategy, you need your entry requirements that eventually give you a certain setup, either long or short, right? You need a clear plan. If we then go to the more bearish scenario, which at the moment is an alternative, then the low of wave 5 is over here. So they have the impulse to the downside and then a 5-wave move, and now the low is over here, and then a 1, 2, 3, 4, 5-wave structure, where the first wave in the W is an expanding flat, which is then a 3, 3, 5-wave move. Then you have a short wave X and another longer wave Y, and then a bigger wave A. Then the reason this is like a potential, like basically the reason this is the more bearish scenario is because you're going to be taking this low over here, and in the other scenario you expect more upside without taking this low. So you then have a wave A followed by a 3-wave corrective structure in a B, where in this scenario, in order to take the low, you could think about an expanding flat, which is then a 3, 3, 5-wave move, where we also test the target area, the support area that we have below price at the moment between 26.2k and 26.3k, with the most common target area for wave B being the 1.236 and the 1.38, sitting between 26.4k and 26.3k, which is taken from this low over here to then the high of this wave A. But then again, we have some bullish divergences, so these have to be invalidated by price taking this low over here, or they have to play out by first price taking these highs and then continue to the downside towards this area over here, after which we then expect a wave C towards the upside, and then an A, B, C expanding flat, hitting the box at the bottom, looking for the box at the highs, and then eventually continuation to the downside. And the CVD, well, locally, we already spoke about the CVD, so we have to wait and see what's happening more locally. By the time this video is online, in about 45 minutes, this might have already played out, because it's 5-minute counting, right? So, or 5-minute CVD, very, very local time frame, and we have to wait and see what happens between this these lows over here, right? Is price gonna drop more, with then also the CVDs dropping for another like more bullish divergence? Is it going to be invalidated? Is it going to play out? We never know what price is going to do, but we can only play the probabilities and hopefully at the end of the long run come up with some nice profits. I hope this video was helpful or valuable to you. Please check out the most recent educational update I have done about the best trading indicator you can use in my opinion, which is the CVD. Thanks for watching and subscribing, and I will see you at the next one. Bye bye.